Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello, good evening to all the viewers and friends of Capital Securities. I'm Guo Yuan, an analyst at Capital Securities and Capital Investment Advisory. I'm very happy to be here today to break down a few topics for everyone, mainly 2 or 3 key issues. So yesterday, or rather, at 1 a.m. today, Apple held its launch event. Let's take a look at what highlights were presented, whether it's the 4-star technology, new specs, or new features, and what benefits or conveniences users can expect from them. I'll introduce these to everyone one by one. At the same time, we'll also take a look at Apple's stock performance and compare it with our previous predictions. In addition to that, several institutions have raised their target price for the S&P Wink with Tongue Sticking Out 500 index, the US S&P Wink with Tongue Sticking Out 500 index. Looking at the target price for 2025, which is the end of this year, let's see if there's any logic behind their predictions. In fact, if we review historical data, we might uncover some surprising findings. We can even discuss what kind of actions or strategies might be a better approach. Alright, third, we'll take a look at 2 heavyweight companies that released their earnings reports after the US stock market closed early this morning. This includes their future guidance as well. Among them, there's both good news and bad news, specifically, Synopsys, SNPS, and Oracle, ORCL. So these will have different effects. For example, shareholders and investors might be happy or disappointed. Let's take a look at how the market might develop next. Alright, first, let's take a look. Early this morning, Apple made an announcement. But before we get into that, let's first talk about yesterday's annual revision of the US non-farm employment numbers. So, what period does this revision cover? It's from April of last year, which is 2024, up to March of this year. So this covers the latter part of Biden's term, as well as the first 2 or 3 months after the transition from Trump this year, around January, February, and March. They revised the data to reflect the actual situation compared to the previous numbers for this year. Let's review the revision to see what the real situation actually is. As we mentioned yesterday, some of the numbers. Investment banks or institutions, from their estimates to their downward revisions, all the news has been about downward revisions. Some revised their estimates down by 800,000 to nearly 1 million. As for Bloomberg Economics, they estimated a drop of 550,000, but the final result turned out to be 911,000. Actually, this matches up more with some of the bigger players. They might be in a rush and tend to estimate higher, so their downward revisions are larger. So, if we look at the annual downward revision of 911,000, that means the average monthly revision is about 70,000. Everyone, the non-farm payroll increase last Friday was only 22,000. This figure, the average monthly downward revision is 70,000. In other words, let's say, for example, the original number might have been around 100,000. In this situation, if there are 100,000 new jobs added, 100,000 non-farm jobs, and then after this downward revision, it drops to just about 20,000 or 30,000. You can imagine how big that change is. Actually, generally speaking, when we look at this indicator, the standard is that the number of new non-farm jobs should be at least over 100,000, meaning it should be a 6-digit figure. Yeah, so it needs to be at least over 100,000, roughly a 6-digit number. With this scale, over 100,000, whether we're talking about the unemployment rate or the labor market in general, it won't cause widespread concern or anxiety. But looking at it this way, the scale of this downward revision is huge, 910,000 people in one go. Revising by more than several tens of thousands is already the most on record, and this is the highest in recent times as well. Alright, let's take a look. So what about this? Actually, since there were already expectations yesterday that the numbers would be between 800,000 and 1 million, when the data was released, there actually wasn't a huge fluctuation. Next, we need to look at Apple's fall keynote that happened early this morning. And of course, the first thing they announced was the iPhone 17. Among them, there's a model called Air, which they say is made to be very thin, about 5.6 millimeters, so it's extremely slim and lightweight. As for the weight, it's only around 165 grams. This really shows that, whether it's Apple or not, they have the ability and design to make the body of the phone this thin. Also, because they've removed the traditional SIM card slot and are using eSIM, which is a kind of virtual SIM card, they can make it even slimmer. This also includes a technology from the supply chain, which has grown along with Apple. Now, everyone knows that Apple can make things thinner and thinner, which is pretty straightforward, because everyone likes things that are light and slim. When it comes to carrying electronic products, like laptops for example, the main selling point is also portability. Laptops, TVs, if they're a bit thinner, that's better. Of course, this applies to phones and tablets too. Why is that? Because if you're traveling far, like going abroad for a trip or on a business trip, you definitely want your luggage to be as light and convenient as possible. So, in daily life, if you hold these devices for a long time, your hand won't get tired, right? So this trend towards lighter electronic products is really becoming the norm, and the key point is, they're not even that expensive. Actually, when we talked about pricing strategies yesterday, Apple's pricing this time was actually a bit of a surprise to the market, or you could say it even caught some industry insiders and commentators off guard, because they originally expected Apple to raise prices a bit, and by quite a lot, too. But yesterday, there was even a point where some of the newer models, compared to last year, actually went against the trend and dropped in price. Of course, this is a good thing for consumers, because we can all buy these kinds of phones at a lower price. Electronics are great. Oh, let me say hi to everyone. Hey, viewers and friends, hello to Xiaomailv, Hiwu, and the staff, and also Hiwu again. Good evening, everyone. And Anna, hello. Good evening, thank you all for watching and listening. We'll keep sharing the latest updates with you. Okay, besides the new phones, there's also the AirPods, specifically the Pro 3. In addition to possessing even more robust and effective noise-canceling capabilities, this device also incorporates an advanced LED sensor. After precise measurement, it can accurately track our individual heart rate, isn't that right? It will then seamlessly synchronize this valuable data directly to the health and fitness application on our iPhone devices, allowing us to conveniently monitor and review it there at any time. For example, over the course of a whole day or even while we're sleeping, we can see whether our blood pressure is stable or not, whether it's staying at a normal level. Sometimes, like when we get angry or sad, our blood pressure might go up. So, we can check if it ever goes beyond the normal or observed values. It's all about monitoring our health. If it's above or below the standard, that means it's either too high or too low, and this allows us to monitor our physical condition ourselves. And then, what I think is most impressive about these AirPods is that they support, or rather, they have this real-time translation feature. Because yesterday, during its looking at the video from the launch event, there was a segment where two people were speaking different languages. When one person spoke in a language that wasn't English, the translation appeared in the other person's ear, and the delay was actually very short. If you go by how it feels, it's about 0.5 to 0.8 seconds, really brief. You can really tell that it's very smooth. I could immediately hear, assuming I was the one, a native English speaker, I would immediately hear a string of English translations. For example, if the other person said something like, "Welcome, today you've come to our place to participate in some event," I would instantly hear the English version of what they just described. Maybe what they originally said was in Italian, French, or even Japanese, it could be any language. But what I actually hear on my end is English. So this is really convenient for users, whether they're traveling abroad, on a business trip, going to different places, like hosting an exhibition, attending a business meeting, or even just traveling around the world. It all works. So even if they go to the Philippines today, they can still enjoy this. Like, if I want to buy something, whatever people say to me, it all sounds like English to me. So for people like me who love to travel the world and visit different countries, this is how I understand it. So there's no problem, and it won't cause any communication difficulties. That's why this is a really great feature. You know, in the past when we watched cartoons or sci-fi, the most famous one is Doraemon, right? He used to eat that translation jelly, or something similar, just take it out of his pocket, eat it, and suddenly you could understand everything. Whether someone spoke Japanese or Korean, it didn't matter. Like when someone speaks Spanish, I can understand it all, that kind of thing. But now, you don't even have to spend any money to buy AirPods Pro or anything, this feature is just there. I'm not trying to advertise for Apple here, but it really does have this function, and we want to introduce it to everyone so you all know about it. And in addition to all of that, there's also the Apple Watch. The Apple Watch has actually been out for quite a significant while now, but let's bring up its impressive features again here. Because for our valued users, as long as you possess an Apple Watch, any of the various series models, it can effectively utilize its advanced optical heart rate sensor to continuously monitor your heart rate with great precision. It analyzes how your blood vessels respond to your heartbeat. It can detect whether you have so-called chronic hypertension. Chronic hypertension, by definition, occurs over a period of time. For example, within 30 days, that is, within a month, if your blood pressure is often higher than average, it might compare this to factors like your age, body type, BMI, and so on. If it finds that this user, the person wearing the Apple Watch, shows a pattern of hypertension, then it will immediately notify the user. So, looking at these new features, they all sound pretty good, right? However, yesterday, Apple's AAPL intraday performance was still the same as we discussed before the market opened yesterday. In fact, the market had already priced this in ahead of time. What do we see here? This is also one of the highlights this time. Some people jokingly call it just another kind of trap, but here, we're focusing on the more premium, high-end ones, so we call it the Hermes trap. Yeah, it's that signature Hermes orange, right? It's actually pretty eye-catching. I think it looks pretty good. Around 1 o'clock, when the event started, the stock actually went up at first. But as people kept listening and watching, just like we said yesterday, the more the presentation went on, the more disappointed everyone became, because in the end, they still didn't announce it. When exactly will there be a clearer, more concrete roadmap for AI? That's something both investors and users in the market really want to know. Because whether it's Google or Meta, whether it's with glasses or new wearable devices or phones, they've either gotten a big head start or are way ahead, so naturally everyone is concerned about when Apple will finally come out with something. I think Apple definitely has the technical capability, but they're just more cautious by comparison, mainly because their fan base and user base are massive, and they're also very engineering driven. They don't want to mess up their own reputation, so they're cautious. But sometimes being too cautious means missing out on some business opportunities. Okay, let's take a look. Actually, only the chart has been updated. Yesterday, it was here, and after the market closed early this morning, it moved to here. This black candlestick in the middle shows a drop. Earlier, when the price shot up, it slowly started to fall back down. As I was presenting during the session, I was talking and updating at the same time, but I didn't actually change anything. There was probably selling pressure during the session. That's true, there really was selling pressure. Because since the end of July, after it found support and moved up, it's already gone up quite a bit. To put it that way, it's already made a decent move. It's not a small amount. If you look at it, that's $30, which is a few percent. Alright, so a correction of just over 1% yesterday is still reasonable. It's pretty reasonable, because after all, it does have some highlights. It's just hard to say whether people will be as enthusiastic when it changes hands. You can listen or share your thoughts about it. What do you all think about this? For this kind of new product launch, are you satisfied or not? Or even if you want to switch, what would you want to buy? You can let us know in the comments section or just share your thoughts, see what you really think, and whether there's anything that actually attracts you. We'll take your feedback into consideration as well. Alright, next, let's move on to the second key point. There are two institutions. This is pretty obvious, as it was highlighted in breaking news. Actually, several other institutions have also gradually raised their year-end target price for the S&P wink with tongue sticking out over the past 2 or 3 weeks. So, this is what we're talking about. We're talking about the end of the year. It's already September now, so there are only about 3 or 4 months left until December. Alright, let's take a look. Barclays originally targeted 6,050, but their new target is 6,450, which has already been surpassed, as yesterday's closing price was around 6,120. So, the potential upside here has already been exceeded. What does that mean? It means they still believe that by year-end, the S&P wink with tongue sticking out could be around 6,450. We're saying around, not that it will hit that exact number. If it did, that would be almost eerily accurate. So, what about the potential upside? It's already been surpassed. Even if there's a pullback, a 3% or 5% correction, it might still gradually climb back up to this level. Right now, it's at 6,512. Deutsche Bank's original S&P wink with tongue sticking out 500 target was 6,550. Now, their new target, wow, it's hit the 7,000s. 7,000 points. From where we are now at 6,512, if you do the math, that's about 7.49%. So the potential upside, according to their estimate, is that the index could still rise about 7% by the end of the year, around December 30th or 31st. Let's just call it impressive, because that's actually not a small number. This is the index, after all, the combined performance of over 500 of the most powerful companies in the entire United States. They patched it up in the back, and honestly, it looks pretty ugly. So, I didn't really consider this a highlight. What exactly is this patch for? Well, there are actually 2 different explanations. One is that it's for charging, so it can make the charging speed faster. The second explanation is that if this patch creates extra space, it allows for the installation of larger components with much greater computing power, basically preparing for future AI capabilities. So, people are right to call it a patch. There's this extra piece, and you don't really know why it looks like that. Visually, it's not tidy or clean, so it feels a bit out of place and awkward. So that's right, it's kind of like waiting for Apple's foldable phone. Yeah, but that might still take a while, maybe half a year or even a year before we see anything. Even at the earliest, since they've already announced something this year, if there really is something new, the earliest rumors or an official release would probably be around August or September next year. Alright, let's take a look at these institutions raising their S&P wink with tongue sticking out targets. Let's see if it makes sense. Let's check it out. This chart isn't complicated, so don't overthink it. There's English on it, but I'll just explain it directly. The line in the middle, the yellow one, right? That's 0%, the zero axis. Each block you see here represents a year, and it's actually pretty straightforward. Basically, for any given year, it's the S&AMP wink with tongue sticking out index at the end of the year minus the S&AMP wink with tongue sticking out index at the beginning of the year. So, is the difference a positive or negative return? On the right side here, let me use the mouse. These are the years with positive returns. This time, we're looking back from 1928 to 2024, which is actually over 95 years, a review spanning about 95 years. But actually, the source is Bloomberg. Okay, so on the left side, that's the annual return for the whole year, meaning the S&AMP wink with tongue sticking out 500, the S&AMP wink with tongue sticking out index. You take the last trading day, December 31st, and subtract the value from January 1st or January 2nd. This is the return index, showing whether the return rate is positive or negative. The yellow line on the left side is negative, and on this side it's positive. It's very clear. If you look at it directly, you can see there are more on the right, which is why people often say that over the long term, the US stock market tends to hit new highs or, in other words, has long-term growth. That's the reason why it tends to go the distance, and their predictions make sense. Why is that? Let's take another look. When the end-of-year value of the US stock market and subtract the beginning of year value, and it's a decline, what year was that? That was 2022, the year of aggressive interest rate hikes. But I'm not trying to be sarcastic here. I'm saying, why are they more consistent? It's because they need to be certain. They're very rigorous. After all, they're PhDs and economists. So, what Trump said actually does make some sense, because he's a businessman. He has to have a sharp sense for these things, otherwise he would have gone bankrupt long ago. Well, he did go bankrupt a few times, but that's beside the point. The main thing is, the last annual drop was in 2022. After that, in 2023 and 2024, there were gains of over 20%, between 20% and 30%, so over 20%. These are the percentages, and in the middle, it's 0%, that's how it is. It's actually pretty easy to understand. Let's look at it again, before 2022. 2021, okay, 2020 is here, 2019, oh. In 3 years, there was only 1 year of decline, 2022. Then came 2023 and 2024, and this year, 2025, so far it still looks like it's going up. But as for 2026, it's still hard to say for now. But let's take a look at the statistics here. So, look, hasn't it gone through 87 cycles? This statistic of 87 times is based on the years, right? So, 2024 minus 1928, anyway, both the start and end years are included, so that's 87 in total. Out of those, the entire year saw an increase, meaning the end of the year minus the start of the year was an increase. 73, let's focus on this side. I'll just highlight it here. Actually, the rest isn't that important. If you want to look at the average, the increase is about 12%, which you can roughly get an idea of. Now, if we're talking about a decrease, that is, after a whole year, the return at the end of the year is lower than at the start, then that's 27%. So, why did I mention a couple of days ago that the S&AMP wink with tongue sticking out is roughly a 3-to-1 situation? In other words, no matter which year you buy in, if you just invest in it and hold until the end of the year, assuming this is just a small part of your portfolio, since of course you'll be trading individual stocks as well, right? You go and whether you make short-term trades, have mid to long-term swing trades, or only exit once every week or two when you see an opportunity, that's all fine. If it comes to the S&AMP wink with tongue sticking out index ETF, just leave it there. If you put it in your investment portfolio, whether you buy it this year or next year, let's say you buy it on the very first trading day of 2026, by the end of the year, you have about a 3 out of 4 chance, roughly 73% to 75% probability. Okay, let's just say 3 out of 4. By the end of the year, you'll likely be in profit, but there's a 1 in 4 chance you might lose money, that's just how it is. So, this chart basically illustrates that. Over all these years, over 87 years of ups and downs, you can see there are more rises than falls, so of course, in the long run, it ends up going up. So when institutions raise their forecasts for the S&AMP wink with tongue sticking out, there's actually data backing up their reasons. Plus, institutions are optimistic about things like increased corporate profits, especially from tech giants and even the AI boom. It's really a combination of several factors. But to put it simply, if we look back at history, over the past 80-some years, let's just call it a drawdown, that's one of the reasons too. Alright, next, let's take a look. Just a few days ago, AppLovin, ticker App, and Robinhood, ticker Hood, were both added to the S&AMP wink with tongue sticking out 500. So why were they included? What are the requirements for being added? Let's talk about that too. First of all, the company must be registered in the United States, and it also needs to be listed on a major exchange. Out of all the companies in the world, being able to get listed on the New York Stock Exchange or NASDAQ is already no small feat. On top of that, you have to meet the following criteria, and even if you do, it doesn't mean you'll be added right away. To be selected, your market capitalization also has to meet the large cap standard, and this threshold can change. At the very least, it used to be $8.2 billion, but now it's even higher because the market keeps going up. So you have to meet the standard, and there are even rumors now that it could be $13 billion or even $20 billion. Only then do you even have a chance to be selected, and that's just the minimum requirement. What's the minimum for a good company stock? In the 6 months before the evaluation date, the average monthly trading volume must at least be at a certain level. The trading volume has to be at least 200,000 shares or more, so the liquidity needs to be sufficient. For example, you can't have a situation where after you buy, the price spread is huge or you can't sell it at all. The liquidity has to be enough. Also, it mentions the most recent 4 quarters, especially the latest quarter, including the most recent quarter as part of the last 4 quarters. Its profitability, the profit situation, in other words, the company must be making a profit. After deducting gross profit and operating costs from revenue, in the end, you have to be profitable, you have to actually make a profit. And you need to do this for 4 quarters, all 4 quarters have to be profitable like this. Also, your profit history needs to be stable, right? If you make a profit for 2 quarters, then lose money for 1, or make a profit for 3 quarters and lose money for 1, then that probably won't work, okay? Next, there's also the issue of public shareholding. That means the shares can't all be concentrated in the hands of major shareholders. For example, if major shareholders already hold 80 or 90%, and only about 10% is circulating outside, that won't work either, because the shares need to be liquid and have market representation. Then, within each industry, the company should have a certain standing in the industry, or its technology should be widely recognized, things like that. These are just some of the more quantifiable or easier to confirm criteria. And finally, there will also be, for example, companies like S&Amp Wink with tongue sticking out Dow Jones and a business group conduct evaluations. Committees hold meetings to decide whether to include or remove companies. Usually, when a company is added, another is removed simultaneously, meaning they believe one may temporarily no longer meet the criteria. Or sometimes it's because there's a better candidate that needs to be included. As for S&Amp Wink with tongue sticking out, since the S&Amp Wink with tongue sticking out index, like we mentioned yesterday, represents a lot of things. For example, the most well-known one, if you think of Warren Buffett, he previously bet on VOO in that famous wager. Ah, that's Vanguard's VOO. Then there's SPY, or other important ones like IVV, and many more. For those looking for a lower-priced option, there's SPLG. All of these are fine, these are all options for you. If a stock gets included in the S&Amp Wink with tongue sticking out index, these fund managers who want to replicate the index's performance will have to buy it. For example, the app we just mentioned, or Hood, stocks like these. Since they've already been added, you have to track them. We have to track and buy them in order to replicate the index's performance. Alright, let's take another look at the overall interest rate trend. Right now, it's still a rate-cutting environment. By mid-September, the difference might just be between 1 or 2 rate cuts. People have already started to anticipate this. Now, why am I bringing up Fitch here? Because Fitch is one of the 3 major credit rating agencies, and actually, Why do they do credit ratings? Actually, when it comes to the fixed income market, or bonds and fixed income yields, their trends and analyses are extremely sensitive and often align with many principles. Whether it's financial theory or their extensive market experience, they are very knowledgeable. So the reason we use it as an example and talk about it is for a reason. He said that, after all, in the US, there will be a rate cut of 25 basis points each in September and December. In addition, next year there will be 3 more rate cuts, though he didn't specify when, but that's okay. In short, we can say that from now until the end of next year, that is, before 2026, the main theme will be interest rate cuts, following the rhythm of rate reductions. The exact timing of the cuts isn't very clear yet, but it looks like they will happen. Next, we'll list out some stocks and bonds that will benefit from this. With interest rates trending downward due to rate cuts, these will benefit from such an environment, meaning that capital will be relatively more abundant. What about precious metals? Gold and silver have also been mentioned before, because, why? It's about opportunity cost. What about deposits? I'm talking about the benchmark rate. Right now it's 4%, but next year it'll drop to 2%, right? So when it's at 4%, I'll deposit more, and when it's at 2%, maybe less, because I might take that money to trade gold. Yeah, one is relatively certain and higher. This is the opportunity cost of holding gold and silver. If the opportunity cost goes down, people are more willing to hold gold and silver. The same logic applies to cryptocurrencies, especially stablecoins with high credibility. Or you could say the top 5 major cryptocurrencies by market cap, like Bitcoin, Ethereum, or other leading ones. The reason is that, although cryptocurrencies haven't been fully recognized by official authorities yet, some investors and traders have already started treating them as part of their investment portfolios or are actively trading them. But still, I want to remind everyone to be careful. In this area, there have indeed been reports of exchanges going bankrupt or shutting down, or cases of embezzlement, or wallets being hacked. These things can still happen and are related to security issues. Or it could be related to scams, so everyone still needs to be cautious. Of course, what I'm referring to here is the market trend aspect, which you can pay attention to. At least, it's much less likely for us to hear about something like the New York Stock Exchange shutting down. So far, we haven't heard of that, or the Nasdaq going under, which is also pretty rare. Alright, so when it comes to traditional finance, conventional exchanges are still more secure, and the regulation is more transparent. Okay, the last thing we're looking at is real estate. This refers to the kind of physical real estate that everyone is familiar with. If you've already bought a house or own property, then congratulations. Either you're already making a lot of money, or you're well on your way to doing so. Why is that? Especially in the next year or two, no matter where you are. Whether you're buying in the US, Europe, or Japan, though Japan is a bit of an exception because the management fees and holding costs are higher. So let's talk about the US, Europe, or even Taiwan, since in Taiwan our interest rates generally follow the US. For example, when the US raises rates a lot, Taiwan doesn't raise them as much, right? So actually, if that's the case in the US, then in the future Taiwan might have to lower interest rates too. And when that happens, the real estate market could get going again. When interest rates go down, the environment becomes more favorable. Alright, so there are even related ETFs. For example, yesterday a viewer asked about 721, or was it 7A or 72? Anyway, it doesn't matter, the point is, it's related to real estate. So I went and took another look at it. Actually, it's quite possible, but it's more of a medium to long-term investment. This kind of portfolio is inherently more about stability, it's basically math, so it's steady, and you might get some yield from it. So it's suitable for investors who have a need for cash flow. Now, if you're someone who wants to profit from price differences, hoping to make gains from market swings or short-term trades, then maybe, you might want to consider other types. But if you're looking for yield, that's fine too. Let's take a look at something else. SBS, this is yesterday's S&P Wink with ton sticking up 500. We just mentioned it went up 0.27, which is still relatively strong. In fact, based on the closing price, it's actually near a new high. Yesterday, we highlighted Apple, but today maybe we can take a look at Nvidia, which is in this. Its weighting in the S&P Wink with ton sticking up 500 is 7.41%, almost 8%. Let's take a look at Nvidia. So, yesterday, it actually broke out of its short to midterm consolidation. If you look at it, it's really been. After the short-term moving average broke below the midterm one, it looked like it was struggling, but now it seems eager to bounce back. Actually, there have been a lot of news stories about it recently, but what I want to mention here is it's related to video generation and software development, that is, coding, or even the currently very popular fields like music generation and video generation. There's a new product called Rubin CPX that can help with these, and it's expected to be released in. It's expected to launch by the end of 2026. Actually, Rubin has already been in the works recently, it's already in the planning stage and developing pretty quickly, moving ahead of schedule. But this is another variation and extension, which is CPX. Alright, so in the future, everyone should gradually start seeing news about it. Here, we're just looking at the short-term support. Actually, if everyone feels optimistic and loyal about it, you can more or less look for some defensive points or support levels to enter again. This is something to consider. As for Nasdaq, actually, we mentioned yesterday that although we expected Apple to face some selling pressure during the session, since its weighting is about 7%, and as for the others, the AI-related ones like Google and Meta have more or less become competitors to Apple. So, it actually didn't affect yesterday's market trend, it might have just limited Apple's gains a bit. Otherwise, who knows, maybe it would have pushed even higher. If there had been more highlights, or if they had announced a clear AI roadmap or a public plan for launching something like that, then the stock might have gone up even more yesterday. Alright, let's take a look at the US stock market trends and some of the key stocks in focus. We're about halfway through here. Let's take a bit of a break here, kind of a transition. He mentioned Besant, who said that since the revisions to the non-farm employment numbers have already come out, the Fed should change its stance. Honestly, I believe the Fed should have changed its stance after seeing the last few non-farm payroll reports. It's just that the final vote hasn't happened yet, right? Now, let's look at whether he thinks there should be another adjustment. He quoted an economist who said, "When the facts change, I change my mind." What do you do? So he's basically throwing the question back. Even those PhD economists, those board members from yesterday, what would they do? In other words, he hopes they will consider things carefully. But as for cutting by 25 basis points at a time, I believe he's definitely leaning toward cutting by 50 basis points or even more. First, because he himself comes from Wall Street, and second, his boss as well. And then there's the big boss, President Trump, who has always said that the rate should at least be cut to a certain level, or even down to 1%, or whatever. Honestly, that's just the mindset of a real estate businessman, and there's really no right or wrong about it, because he wants to quickly boost the US economy. If rate cuts are really too slow, well, if the US economy ends up going into a recession, that wouldn't be good. That's what he's hoping to avoid. Alright, let's look at another international situation. There's a news report here. While Russia and Ukraine are still fighting, Poland has said that a Russian drone entered their airspace. Wow, an airspace intrusion. Even though it was just a drone, not a fighter jet or a missile. Alright, but this is actually pretty serious. So, the European Commission's Ursula von der Leyen also confirmed it. As a result, NATO, the EU, and member countries have been gradually closing their airspace. Let's take another look. Actually, there were already reports about this before. What is this picture showing? You can see, if you look here, right? Ukraine is over here, and the fighting has been ongoing in this area. There's been this dispute in eastern Ukraine, and the front lines have kept extending and continuing. Now, Belarus is here, sandwiched between Poland and Ukraine. And over here, there's Kaliningrad, which is what's called a Russian exclave, meaning it's not actually part of the Russian mainland. It's not on Russian soil, but it's still under Russian control, or you could even call it Russian territory. So, what have we often seen in the news about this area? NATO, or the three Baltic states, Lithuania, Latvia, and Estonia, plus Poland, and between them there's a place called Suwałki. It's been cut off, right? This area is actually a crucial spot for military logistics, no matter how you look at it. And if you see the arrows we've drawn here, they show that this whole area is under NATO's influence, right? Over here to the left is Poland. So, if they want to transport military equipment or troops, the best way is by land, basically, going through this corridor to deliver supplies to Lithuania and Latvia. That's the situation here. But what about these three countries? Since this area is the Baltic Sea, if they want to connect with others like Finland up north or Sweden to the west, they have to rely on sea transport. And I'm just right next to them. In reality, the military strength of these three countries probably isn't as strong as Russia's. So, they have to band together, including countries like Poland and also NATO support, for example, reinforcements from the US military and US bases stationed in Europe. Of course, that's why they're all worried that Russia might use its exclave, Kaliningrad, or even Belarus to launch an attack. They're worried about attacks on this very narrow strip of land, or as it's called, though it's actually near a small town. If it gets attacked, it would basically cut off the connection between Lithuania and Poland, so this could have some serious consequences. That's why there are concerns that the situation in Europe could escalate even further. Alright, let's take a look. Otherwise, the Prime Minister could directly invoke NATO's Article 4. Now, most people are more familiar with Article 5. What is Article 5? It means that if any NATO member is attacked, it's considered as if all NATO members are under attack, and all members are required to provide military assistance or send troops to confront the enemy. So, what is Article 4? Article 4 allows member states of the alliance to request consultations with their military allies. So, of course, their allies would support them. For example, Italy's foreign minister said this is a serious matter, that this is an infringement on our Euro-Atlantic region, and that this part of Western Europe has already been affected. They've basically come right up to our doorstep. The French president said that he would quickly speak with the Secretary General, Ruda, and that both sides need to look into the matter, emphasizing the seriousness of the situation. Alright, let's summarize. Some European military-industrial companies are listed on the US ADR, and these are generally the bigger ones, like Thales or Rheinmetall. For example, Rolls-Royce Holdings in the UK focuses on making aircraft engines and power systems. Then there's BAE, which is also a well-known name. I'm just listing a few here, but keep in mind that even though some of these companies are on the US ADR, not all of them necessarily are. When it comes to buying and selling, if you feel like you don't want to bet everything on a single company, what can you do? You can choose, right? For example, a basket of stocks, like the European Defense and Military ETF, EUAD. That one mainly invests in Europe's defense and military industry, pretty much focused on that sector. Its holdings are all focused on Europe. If Europe continues to loosen its military budget restrictions, that means they can increase investment in this area. Plus, with the recent escalation in the situation, this sector has a lot of potential, and there could be more orders coming in. Now, on the other hand, if you think that right now, if you don't want to focus solely on Europe and think the US is also a good option, or you believe the whole world is actually entering an arms race, just look at what China, Russia, and North Korea have been up to lately. They're holding military parades, right? They're showing off their military strength, aren't they? So you can make comparisons. For example, if you think, hey, some Western companies might also benefit from this situation, like in the US, they might go to Congress to request a higher military budget. It doesn't matter if it's for fighter jets, drones, missiles, warships, or submarines, they could all get more investment. Then you can just buy ETFs related to these sectors. Here, we've listed some of the more prominent and larger ones, so you can cover a whole basket at once. That way, you're investing in a long-term theme in the market and industry, not just focusing on a shortage or a single stock. That's the idea. Let's keep going. So, just now at 8:30, the PPI should have already been released. We'll take a look at that in a bit. For today's topic, let's talk about it first. Yesterday's earnings report came out for SMPS Synopsys. Since they're involved in electronic design and semiconductor-related software for IC design automation, their stock actually dropped more than 18%. Both their third-quarter results and guidance fell short of expectations, meaning that their upcoming performance is also expected to be below what analysts and the market had anticipated. Alright, so let's look at their revenue, $1.74 billion, while the market's latest forecast for this quarter was $1.77 billion, so that's a bit weak. Then, their EPS was $3.39, which is also quite a bit lower than the expected $3.80. So today, we need to watch how strong the selling pressure will be during trading. Because a gap down at the open is pretty much unavoidable. If it opens lower, it opens lower. But what happens after that? Now, looking at this, actually, the company mainly does three core businesses: advanced design, verification, and so on. In terms of display IP, so its price-to-earnings ratio was actually quite high before, around 47 or 48. Most recently, well, that might have been the previous day's closing price, right? But because the after-hours market yesterday and the pre-market today aren't looking too optimistic, it might end up at a lower level. It might be in the 40-something range. If things go well, maybe it'll be in the 50s, but if things aren't so great, it could stay in the 40s, maybe. In this situation, what we need to watch is, after opening lower, will it keep dropping, and is the selling still not over? Or, after opening lower and dipping, will there be bargain hunters coming in to buy at the lows? That's what we're watching today. As for Synopsys, even though the opening is already set, but how much is it opening down? And what about the intraday range and trend? How should we look at that? Its intention isn't to drop into the 30s. If it did fall into the 30s, for the IP industry, that might actually be a bit attractive. For example, if you look at the big leader arm, it's trading at maybe over 80 times earnings, or even over 100 times. So if it's in the 30s, that's still within an acceptable range. People generally feel that, relatively speaking, that's reasonable. So in the end, Guoben will probably still foot the bill, but as for Apple phones, they're probably beyond saving. Sigh, these Apple phones. Actually, there are always two camps debating Apple versus non-Apple supporters, and of course, each side has its own loyal fans. Or maybe there are people who just really love the technology and enjoy using it, but will Guoben really be the one to pay in the end? Actually, I believe that for the most part, probably over 80% people will still buy a lot and widely. It's just that the wave of people upgrading their phones isn't as enthusiastic. After all, they've also released a new color, but color is such a subjective thing. Some people really dislike those flashy, eye-catching styles, they just want black. Ah, deep blue, some people might like something more eye-catching. Actually, for me personally, I prefer brighter colors. Why? Well, sometimes, you know, the traffic in Taiwan isn't that great. If you're out at night, for example, wearing something brighter might help you avoid accidents or deal with lighting issues. Alright, let's take a look at Oracle's, ORCL, latest financials. Actually, their earnings report wasn't particularly impressive, but there were a few items in there that really got the market excited. So, their AEPS was about the same, 1.47, 1.48. As for revenue, $14.9 billion, which was actually below expectations. But after hours, the stock price surged, jumping over $20, almost 30%, even more. Right after their earnings report was released, they also announced their future orders, that is, their remaining performance obligations that haven't been fulfilled yet. In other words, these are orders that haven't been delivered or recognized as revenue yet, but will be recognized in the future. Over $400 billion. In most recent quarter, revenue was $15 billion, but in the future, they're set to receive over $400 billion. Imagine what profits will look like, that's staggering and explosive. Year over year, compared to the same period last year, that's a massive increase of 359%. So, they're getting so many orders that their hands are basically numb from taking them seriously, their hands are worn out, they might not even be able to handle all the work. But luckily, they're a software company, so it's just a matter of scaling up. It's just a matter of how fast or slow they can do it. In the end, they should basically be able to get a piece of the pie. As long as this medium to long-term trend doesn't change, or unless something else happens, like a weakening in demand or related concerns being triggered, everything should still be fine. Last quarter, it partnered with OpenAI, which is the parent company of ChatGPT, to jointly develop a data center in the US with a capacity reaching 4.5 gigawatts. Yes, that's GGW, such a huge capacity. Honestly, that's pretty astonishing, and it has really sparked a data center boom. Like today, whether it's servers related to data centers or just the whole data center concept, in Asia like Japan, China, or even Hong Kong stocks, there's actually been some upward momentum. So we've kind of ignited everyone's excitement about data centers, like, wow, is this growth going to keep going in the future? Is this demand basically never ending? It seems like this kind of optimism has come up again. Alright, let's take a look. In fact, no matter where you look, even on the official website for processing, actually, Oracle is also involved. The US software market already considers Oracle the second largest player. Everyone knows who the biggest is: Microsoft. Microsoft has the largest software revenue, and Oracle comes in second. In fact, according to recent news, if Oracle's market value rises today, say, with pre-market trading up about 28% to 30%, it could even surpass JP Morgan Chase, the well-known investment bank. And then it would become the 10th largest company by market value in the US, which is really a matter of timing. Of course, not to mention its major shareholder, the founder, Ellison, who might also move up a few spots on the billionaire rankings. Congratulations to him, because he really has built a great company. Whether it's in cloud design, cloud infrastructure, or enterprise software systems, it's extremely strong in all these areas. In fact, it's been a well-known name in the industry for a long time. It's already an established tech giant. Now, there's new momentum. Oracle doesn't just do one thing, right? Actually, its business scope is very broad. Thanks to Jeff for the question. Of course, what it's most famous for is, previously, what we commonly talked about was its office applications, or systems optimized for various roles within enterprises, or systems for enterprise operations. For example, whether it's inventory management, or office marketing. Everyone knows, all of these are actually included. It's already an integrated system. You can think of it as an even stronger SAP in the US stock market, very powerful, and many established companies have been using their products for a long time. If we look at today's PE ratio, 55.9 times was the previous figure, but it hasn't been fully updated yet, because as soon as the stock price jumped today, the algorithm immediately recalculated everything. So it might go up to over 70 times, who knows, maybe 70-something times. But looking at it now, if it's around a 30% increase, the price will probably be just over 300, maybe starting with a 3. The stock price might be in the 300s. Alright, so we'll keep watching it during the trading session. Now, since we just talked about data centers, let's bring up WYFI. This company was actually only established in 2024, so it's just a little over a year old. And you can see it hasn't been listed for long either, because if you look at the chart, you'll notice it only started around 2025. It started trading around June or July, mid-year. Initially, the price was quite high, around $25, hovering near $24 or $25. But then it dropped, and after that, it gradually climbed back up. Yesterday, it went up 14%, which is strong. So this is just for your reference. You can go check out this company. Its main business focus, as I mentioned, is the design, development, and operation of data centers. Also, I want to share its current PE ratio with you all. Don't be shocked, but it really is this high, over 300 times, about 340 times. Well, since it's a startup after all, it's understandable if you want to give it a higher valuation or not use PE as the main metric for evaluation. I think that's totally fine. Just be aware of the risks involved. It is definitely riding this current wave, so let's take another look. Let's look at some important financial events and key data, like the PPI. We'll check in a bit to see if it's already been released. At the half-hour mark, it should be out. The futures have already gone up, pretty much as expected. And looking at it, it's around 0.3 or so. As for the Nasdaq and Dow Jones, when I checked before the live stream started, they were actually still down. But now, they might both be up, with gains between 0.38% and 0.5%. Alright, let's take a look. Alright, the data is out, so let me update everyone. For the PPI month-over-month, the previous value was 0.9, but the latest release just now is minus 0.1. That's negative 0.1, not positive. Let me repeat, it's actually minus 0.1. As for the year-over-year figure, the previous value was 3.3, and the new annual rate is 2.6%. Just wanted to give everyone this update. So, how should I put this? PPI actually reflects producers, right? The production costs for these companies. If the month-over-month figure is still negative, the forecast was 0.3, but the actual result is minus 0.1. That basically means people feel that price pressures really aren't that high. Everyone will probably still have to look at the labor market to get a sense of what's going on there, because the non-farm payroll numbers were already bad, and after revisions, they were revised downward again. That means the slowdown actually started back in 2023. Then employment started to gradually weaken. Okay, so that's the update on the PPI for everyone. Next up, it's time for the US stock market earnings reports. Today, there will be one related to Lara, a company under its umbrella called Lara. The ticker symbol is IDEXY, so everyone can keep an eye on that. As for tomorrow, after the market closes, Adobe will be reporting. Before the market opens, it's Kroger, which is a well-known American retailer. You could call it a supermarket or a wholesale store for daily necessities. You can call it a grocery store or a wholesale store. Nowadays, people don't really say grocery store anymore, so it's more common to call it a wholesale store or supermarket. They also sell some fresh foods. Actually, this can reflect retail prices, so we can see whether their CEO or their financial reports reveal any clues that might affect overall prices. Alright, finally, let's take a look at the pre-market ups and downs in the US stock market. Today, as expected, there are two standouts. One brings worry, the other brings joy. S&Ps, just before the market opened, around 6 o'clock, was up about 21%. And what about Oracle? Oracle is up 3% in pre-market trading. Actually, in our group, we've already released reports on it one after another. For example, our analyst Huang has already published a report on Oracle. Honestly, if our top analysts have released a report, everyone can go back and take another look at it. Of course, it doesn't mean you have to believe 100% or immediately go and buy, but you can evaluate whether what's discussed in the report makes sense. The key points written on the side are also very insightful, and that's something I really appreciate. So if you see in the group that you're trading or operating in the US stock market, or if you're investing in US stocks, you can stay in the group. Of course, our researchers for the Taiwan stock market are also very professional and dedicated. They always provide everyone with the latest information. Alright, I'm glad that's it for today's Uinta Good Night. Wishing everyone lots of profits and smooth trading, whether in US or Taiwan stocks. Good night from Uinta, see you all tomorrow, bye-bye. Thank you to all our online viewers.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.